punching you. That's not even cool. Like, I'm just saying Rodrigo did a great job, Don. Give me a break. You know, redheads don't need this type of abuse, Don. Don't do that. All right, listen, guys.
Right.
All right, leave the guy alone. He's working hard. Listen, guys, right now you can check out on the screen. We do have our high risk warning up there. We put this up there for legal reasons, but we also put it up there for your own good. So I'll give you like 10 seconds. You guys can read it over, and then we'll work on with our next presenter, who I'm pretty excited about. All right. I always feel like that's like a moment of silence in the finance church. You know, bow your head and pray for a big day, and you come back, and here we are.
Just after the Fed speaks, the same silence.
Right.
You know, when Jerome Powell goes out and raises the hikes and the interest, the floor of the exchange is goes like that.
Moment of silence. All right, let's go to our slide, and let's tell everybody about Matt. So, guys, we have Matthew Mocorro here today. It's Matthew's first time with us, and today he's going to be teaching us the ultimate squeeze play for stocks and options. Now, Matthew is a really cool guy. He believes in achieving trading success through a simple and repeatable plan based on meaningful goals. And that seems to be a through point of a lot of the speakers here today, which means that they must be onto something, right? He teaches traders the art and math of generating consistent profits with options and stock market momentum. Now, Matthew's approach focuses on a simple trading strategy for selecting breakout trades, showcasing the ease and identifying profitable options and stock breakout patterns. With Matthew as their coach, traders can simplify the market and achieve consistent success. You can find him over at ConcordiaFinancialExchange.com. We have the website down here at the bottom of the page. Let's bring out Matthew Mocorro. Matthew, how are you today?
I'm doing great. Looking forward to it.
Yeah, so glad to have you here today. They're saying, be careful, be patient. Matt is about 80. Matt's not 80 years old. Look at his picture. Matt, how old are you?
Just past 40.
Almost, that's what I say. You look maybe 35 or something. All right. Well, welcome to the show, buddy. What we're going to do right now is we're going to turn off our cameras. We're going to mute ourselves, and we're going to give you full control over everything. And we're looking forward to seeing what you have to teach us today.
Perfect. I am looking forward to it as well. All right. Should be on my screen. Okay, good. So thank you for the introduction, and I'm definitely looking forward to being with this group today. And this is, as stated, my first time in this specific group, but I've been in this industry since 2007. For those that remember that was the Great Recessions, 07, 08, 09, or at least in many of our lifetimes. That's when I started in the financial markets. And I'm starting on this slide just to set the tone for a little bit of the background of where I come from, because ultimately I want to jump to the charts and really start talking about how to simplify the market. And we're going to be talking about some of the most used indicator sets, but we're going to do it in a unique way to identify what I like to call a squeeze effect, where you get a combination of a trend reversal paired at the same time with a surge of trading volume, aka momentum. That's what we're going to be highlighting. But the background here is because I've been in your shoes as both a trader, but I've also been teaching traders for many years at this point. And I started my career working for a company. At the time, it was one of the largest financial education and trading technology companies, and began on the phone doing what I do today, which is coach traders. But back then, I had no idea what trading was or how to trade or how to read charts. So I was actually taught and paid to learn how to trade, and then ultimately became the chief revenue officer of that organization, close to $50 million in revenue, leading a team of well over 150 employees. But the access that I gained from that experience has been tremendous, because not only did I understand how to trade from a trader's perspective first, but then in how to develop products, services, technology, anything from trading signals to software to widgets to one-on-one coaching types of programs and services were all under my purview. And so the access was also tremendous in managing the customer support teams. So when you have tens of thousands of clients, you get hundreds of thousands of support cases. So really seeing firsthand the types of issues that traders were up against, such as identifying trend, timing entries, how to manage money, or how to manage the psychology of managing wins, and also how to manage losses effectively. So that's a little bit about the background. I think you can get a gist from this quick little 4 bullet points that I believe in momentum. I believe in price action. I believe that simple is better because it's something that we can repeat. So I'm not here to try to wow you with my charting skills. In fact, I'm trying to simplify charting and remove some of the difficulties that some traders face when looking at a simple chart. So that's what the end goal in mind is. And then to get there, I want you to be able to walk away with these 3 components. Now, we've got less than an hour here, so I really want to focus on a simple approach today that you can walk away with actionable items. So number 1, I'm going to show you a technique of how to identify breakout patterns, not just trend up or down, but when something's about to break out. Now, to me, a breakout is at least a 10% or higher move in a short period of time. Talking about days, not weeks, not months, not years. So we're talking more of a swing trader type of look. So days and weeks. Different ways to set up on autopilot. Okay, I'm not talking about a robot that trades your money automatically. I'm talking about leveraging simple orders that every major brokerage firm allows you to use, but most traders don't use. So I'm going to talk about how you can do that both on stock trading as well as option trading. And then I'm going to give you all a step-by-step checklist today. One of my 10 that me and my traders use on a daily basis. Okay, so I'm going to give one to you so you can understand how this process flows. So again, you can walk away with actionable items. That's my goal. Whenever I'm in a room like this, I want you to be able to walk away with something you can actually implement. There's nothing going to be hidden. Nothing's going to be a secret. You'll be able to see full transparency, exactly how I lay out my charts. And to me, I think that's the best way to do it. So that way there's nothing to guess through or to assume. You're going to see exactly how it works. Now, I'm sure you've seen many different software today. So what I'm going to do is I'm going to be using TradingView, and it's not really a strategy that is solely available on this platform. Okay, so this is just my choice. You can use any software of your choice because I'm not using anything proprietary. My goal when I left my former company was to provide access without requiring large investment outside of your trading costs, right? Trading costs is, if I make a trade, I've got to pay my fees, I've got to pay my commissions, right? That's something that we can't really get away from. But things like software costs, things like other tools and resources, widgets that are out there, there's some phenomenal tools out there. No doubt, a lot of them are here today. A lot of them are represented in this event. But ultimately, I've got a lot of experience in navigating the trading world, especially around products and services. So I like to give back to my clients in different ways other than just simple trading. It's also, how do we look at our trading business a little differently? So managing costs outside of our trading costs is something very important. Now, what I'm going to do here is I'm going to quickly walk you through my template. Now, I can't walk you through everything of how we look at a chart today, but I can definitely give you the most important pieces today. Now, you're going to see me use some of the most commonly used indicators out there. Some of you have already seen them. They're in the top left corner of this chart. Now, I'm going to hide a couple of these, and I'll come back to them in a moment just to clear the space here a little. Now, in front of you, I have the S&P 500, the SPY symbol. And in the top left corner, you're going to see that there are 4 indicators stacked on top of each other. You can see those 4 indicators also represented on the software. We have 3 moving averages. These are simple moving averages. You can use exponential, you can use weighted. But again, when I started the presentation, I talked about being simple. So these are simple MAs, or moving averages. Now, I've got a very specific combination that I use. There's many different combinations that traders use because these are the most common trend indicators out there. But the combination that I use is specific to this strategy I'm sharing. We use a 10, a 20, and a 50, 5-0. That gives us an inner trend line, which is our 10. It's a smaller, right? Then we have our intermediary, which becomes our 20, and then we have a 50. Now, the majority of the trades that I participate with and that I send, okay, so you're hearing me now talk about a program. So I not only teach, but also provide options trading signals daily to my traders. the majority of those signals are done daily. And the reason I do that is because for me, I am an optimistic person. If I stare at anything long enough, it's going to look good. It's just the over optimistic side of my nature. So I had to think through, how do I take advantage of the market that will put me in a mental state where I can be as objective as possible. So quickly for me, objective is math, reasoning. Okay. So I want to be in a mindset where I'm looking at data as objective as possible. I don't want to be subjective, which is where you get into like art, right? Difference between art and science. Art is subjective, opinion-based. Science is, I mean, it's almost a pun these days after the COVID, but you get my point. Science, AKA math. Math is probably a better way to explain it. Math is objective. So I want to be in a mindset where I look at a chart. Doesn't matter what chart I'm looking at. And I need to be able to quickly and objectively determine what is happening and then what is going to happen next. So when I incorporate this template, this is the same template I use across any time frame. I'm on a daily chart. It could be on a 5-minute chart, could be a weekly chart, could be a monthly chart, could be an ETF like this with the S&P, could be a stock, small cap, mid cap, large cap, mega cap. It could be a futures Forex chart. Could even be a crypto chart. If there's volume that I can track, and if there's price, AKA I can determine trend, then this strategy is what I use across the board. I don't switch templates based on a specific day of the week, what side of the bed I woke up on. It is the same template regardless of time frame, regardless of type of symbol I'm looking at. Again, simple and repeatable. So this is for those that may not be as familiar with moving averages. This is how we look to the data. For those that know moving averages, give me a few minutes. Let me catch up the rest of the room with the speed quickly on what this information tells us, and then I'll come back and put it together in a symptomatic process. So number one, if I know that I'm on a daily, I'm going to now talk in terms of days. So the 10 is this blue trend line. So if I look to where we are today, right now, the market's still open. I'm in Florida, so I still have 45 minutes. That's why you'll see 314. And guess I'm on the East Coast. Now, the current price of the SPY is $427.84. Independently of a trend, all I know is what the price is. Now, I can look at it and say, well, it's definitely higher than it's been, right? But I need to be objective. So when I deploy one trend line, I can then clearly see that our 10-day price is down here. So it's a $420 price point is what the 10-day average has been for the SPY. Well, we're currently trending and trading above, right? So either above or below. So we're trading above the 10-day average price. Okay, so short term, we're trending higher. If I drop into 20, so now I'm looking at now another data point. Well, our 20-day price is 417. All right, well, still above that. So now I've got two directional confirmations. Then I take in our longer term trend line, which is for us our 50, so 50-day average price. It's at 411, right? So without looking at individual prices, I'm just looking now at the data in front of me. I know that we are above this line. We're above the 20, and we're also above the 50-day. So now I've got three confirmations that the price is trending higher. Okay, so that's how we incorporate these moving averages. And they give us different data, and they give us at different time intervals what that trend is. Now, in a strong trend like we've seen here over the last several days, it's not as powerful. But what happens is when you start to see the shifting of these trends, they give us early indication of what to expect next. You see, I love a lot of the comments that are typically made, not here yet. This is a smart group. I have a good feeling about it. But most people, when people start analyzing a chart, some of the first things that come up is, oh, well, you're looking at the past. How does it help you in the future? You'll also hear statements made that this indicator tells the future, other indicators don't, or other indicators don't look at the past to predict the future. Well, that's not factual, because every type of analysis done, no matter what tool you use, if you're manually drawing on a chart using trend lines manually, if you're using even Fibonacci sequence numbers, right? You're looking at Fibonacci extensions retracements. If you're using all the other hundreds of different indicators, they're using data from the past to try to forecast the future. How do you know where prices of homes are going to head? Well, you typically have to understand what prices of the homes like yours are being sold for. Are the prices selling higher or lower than yours, right? So even if you're trying to predict where the home prices are going to be, where your home value is, the only way to base that is on what's being sold, right? What has been sold. So every piece of future forecast is always going to be leveraging some type of history to formulate an expectation of the future. All right. So once we can understand these trend rules, and I'm going to start to give you some of these real world examples of how this is applicable in a second. But the fourth thing I want to introduce is how we look to volume. So on the bottom, you're seeing an indicator stack down here, which is just measuring volume. Okay, this is the number of shares traded. This is not dollars and cents. And I have them represented in columns. So each day, because I'm on a daily chart, you see these columns that are measuring how much trading activity was in a particular day. Now, again, without a basis of measurement, we truly don't know if a day of activity is higher, is it lower, is it on average, what is happening with activity? Because without activity, the markets don't move, right? To really hammer that home, just think about what happens on Saturdays. Saturdays, the prices don't move. Why don't prices move on Saturday? Well, it's because the market's closed. Well, market's closed, which means there's no trading activity. So starting Monday at 9:30, when the bell rings, right, you start to see prices move because there's transactions taking place, right? That's how the markets work. But what happens when you combine trend with volume and momentum, you start to identify patterns that repeat themselves. And what typically happens at a reversal point is that you see when there's a surge of volume above an average at a specific point where there is a shift in trend direction, you will find that the prices move fast and quickly after that takes place. Now, there's no absolutes in trading, so there's no 100% of anything when it comes to the financial markets, just like there's nothing 100% or absolute about life, right? About love, right? There's no absolutes there either, okay? So same thing in the financial markets, but to a high probability of the time, you will see prices break out. And it's not just happenstance. You will see surges of volume taking place. Now, I'm talking about the SPY, but I'm going to transition to stocks, individual stock symbol. So let's just go to a lot of hype stock, one of the largest, obviously, companies in the world, which is Apple. Now, they just had their big event. I think it's still going on, right? They released the iOS 17, and there's a lot of hoopla around Apple. I think they're a fantastic company. It's hard to argue against their financials. But even looking at Apple, when you take a look at where Apple is today, and more importantly, where it came from, this strategy I'm sharing with you, and I'm going to give you the tools to, and the actual keys to this strategy, is that by understanding how we can combine trend with momentum, you'll start to identify the magic question, the answer to that magic question, which is when, right? What am I going to trade? When am I going to trade it? And how do I manage it? All right. So how do I manage my entry and how do I manage my exits? Okay. So when I scroll out here, I'm going to put a lot of data on the charts in front of us. And I'm going to remove the smaller trends for a second. Let's get rid of the 10. Let's get rid of the 20. And let's just look at the 50-day moving average. I'm going to leave volume on the screen. And let's just look to how price reacts. Now, what I want us to pay attention to are the moments of reversal. Okay, so when we're going to use this red 50-day trend for is the final litmus test. Is it above the 50? Is it below it? Okay, when we're above it, we're thinking uptrend. When we're below it, we're thinking downtrend. Of course, the smaller time frames are going to give us more data. Okay, but I'm going to try to simplify this in the time I have for today. What you're going to see is I want you to notice when we reverse. Okay, so as we did back here, this is the beginning of the year. You see how we're trending below it, and then we start to come back up, and then we cross up. Okay, so this is a golden cross. The price is crossing up. So we cross up, look down below what takes place at the same time. Now, mind you, this is the end of the day. So this is an end of day strategy, and we set up for tomorrow. Okay, so just think about what we find today. we're trying to set up for tomorrow. We want to catch the breakout. We don't want to chase it. I don't like to chase anything down. Again, I'm optimistic. So I found that if I can be in front of the trade, be waiting, objectively find an opportunity, set up my opportunity. So I know when I'm going to get in, what price I'm going to get in. I then know where I'm going to exit, and I know where I'm going to use a stop loss. I use a stop loss in every trade. If I'm trading stocks, if I'm trading options, I always have a protective stop loss in place. So the combination that we look for, and I'm going to give you a powerful way to search the market on your own. Okay? You don't have to just stumble upon these. You're going to be able to find a specific list of stocks every single day you want to trade. I'm going to give you the recipe to find them automatically, okay, using a screener or a scanner, whichever way you want to describe the tool, right? You can screen the market, you can scan the market and find specific types of stocks based on specific criteria. So to find what we're looking for, we want two things to happen. We want a reversal, okay, a trend reversal. So we're looking at the 50-day as our long-term trend reversal point. So when we are below, we come above. That becomes the pattern reversal. That's step one. Step two, we also want to ensure that we have momentum in that direction. So the reversal here, you look down below, you have this fuchsia trend line. That's a moving average again, but it's a volume moving average. So to give you an idea, on this day, there was 81.76 million shares traded on Apple. The average was 75 million shares. So the 20-day average has been 75. So we had 6 million shares more than the average on that day. Well, it happened at the same time we had a key reversal up top. That becomes the breakout opportunity. Now, we don't just buy it at the market. What we do is we ensure that we catch a breakout. So we simply set a pending entry. So pending entry is an order in advance of the price actually being at the price. Okay. So for example, on this position, the high on that day was 143.32. So we've set one tick or 1 penny above that bar high. So that becomes our pending entry order. That's where we want to sit to catch. Now, we want to catch the breakout. So effectively, if that price gets hit, it will automatically execute our trade. If it retraces the next day, then that's not a breakout. That's a retracement. We're trying to catch the breakout. So the final step is sitting on top, looking and waiting to confirm that price is going to rally. May not happen the next day, maybe the day after that, but we have a pending entry above the high. So if the market decides to pull back on us, then we're not in it yet. If it pulls back, it doesn't change the trend necessarily. It just means we're going to get in at a better price. This becomes the first objective we're looking for. Now, of course, after this, many of you already saw the chart. It takes off. What I want you to start to identify is this reversal. It's both bullish and bearish. Now, if we rewind and go back a little further, this bearish drop that occurred also was a breakout bearish pattern formation. But instead of being bullish, we went back down. And you can see if I go back in time using the back in time machine, this became your indication. Okay, big red day, marked down below that 50. So we crossed up and back down. Oh, look at that big volume below it. So it doesn't matter if you're bullish or bearish. We're looking at what the market gives us. We're not dictating to the market what we want. We're letting the market tell us. And all we do is we see it, and then we go and try to catch it, right? It's like going fishing to your favorite fishing hole, right? You can't just blindly throw your rod, your bait in the water hoping to get a fish, right? Most of the time you're trying to be at the right time at the right place. Same thing here. So that trigger and what we look for is the reversal that we found with the volume below it. That creates the momentum. You can go back on any chart and you can see this big reversal back up again. Look down below. You had the volume spike, created that reversal point. Look, same thing here. Came back down again. You can see the volume at that moment of time. Back here, same thing. Back here, same thing. Now, exiting, okay, I teach people how to exit too, so don't worry about the exit side. We use previous highs, previous lows to go target. We can pull any random stock. I mean, let's just go down a list here. Here's Ford. This is an active signal that was sent out. This is Ford at 1289. We identified a breakout here. This was just last week. Look at the formula of why we set up a trade. This is an example of a full trade outlaid. You've got an entry order up front, stop loss placement, profit target. Look at the reversal point down here. I'm going to give you the recipe in a second. I'm going to show you the checklist. Don't worry. I know many of you are itching to see it. And I run many of these presentations. I know exactly what the feeling is on your end. Remember, look down at this combination. We shifted up. Look at the volume, right? When you see volume like this, right? This is 123 million shares on Ford. The average was 61 million. That's 2 times the average volume. What would create that much enthusiasm where you see a spike of 2x, 2 times the normal day? You think these buyers are optimistic that Ford's going to go higher? Or you think it's going to go lower? Why would there be a flurry of buying activity here? Of course, right? There's optimism. When you buy, how do you make profit? How do you profit off that, right? You got to sell it. Well, if I'm going to make profit, I've got to sell it higher than what I buy it for, right? Very simple stuff. But the objectivity here is clear. High volume spike at a reversal point. That's the time we want to be buying, right? And you see that massive gap that happened, right? This massive gap that next day, that gap is created by momentum, big momentum. So if you had an ability to go find a list of stocks, could be 60 stocks in a list, could be 20, could be 100. When the days and the markets are rocking and rolling, you could pull up a list of stocks and find 100 stocks in a breakout pattern. Now, low volume stocks, low volume days, you're going to find less of those breakouts because there's low momentum in the market. That's the essence of what price action is, right? That's what creates market momentum. So if I want to find breakouts like this, well, number one, I want to be able to find stocks that are liquid. What I'm going to do is I'm going to pull up specific criteria that you can use to find these patterns on your own. So this is the built-in screener that's embedded inside of TradingView. And again, you do not have to use TradingView. You can use any software of your choice here. This is the specific criteria that me and my traders use to aggressive bullish breakout patterns. So I want you to write this down, or you can take a screenshot if you want. And this is the data that we're pulling from this. This is what it's telling us. Now, the top two, symbol type, exchange, those are just simple liquidity market types of focuses, okay? Now, below here, this is where it becomes important for us. Number one is I want to have liquid stocks to trade. So the first thing I do is I set a minimum for market cap, the size of the company. My minimum is 200 million. Why 200 million? Because that's a small cap definition. So small cap is 200 million or higher. That's what this is saying. So I want 200 million as the minimum stock that I want to see in my list. And higher, of course, right? Up to 2 trillion. Apple, right? Now, I also want to have liquidity on the activity, right? So I then have volume. I've got a minimum of 1 million shares. Again, I want to be able to get in at the price I want, and come time to sell it, I want to make sure that there's the opposite side of liquidity. So when I buy, I want to be able to sell and get the price that I want to sell it for, right? So that requires liquidity. So I want to make sure that there's a minimum of 1 million shares traded on the symbol that I'm going to trade. Now, average volume is here to ensure that I've got historical liquidity. You see, you can have these stocks that average 100,000 shares, and then they have a big buy from their CEO, big insider buy of 10 million shares. And then the next day, it drops back down to 100,000 shares. You see, that's not something that has historical liquidity, because ultimately I trade primarily on options, option calls, option puts, single leg options. So by setting these types of liquidity boundaries, I'm able to ensure that when I want to trade the option, I've got a high percentage of those stocks that have good options behind them, liquid options to trade. So 3 specific sets of filters to answer liquidity. Now let's start talking about momentum, right? So then I want to have the technology do the heavy lifting and give me the stocks that traded at high momentum for the day. So that's when I deploy relative volume. So what this does is simply provide a mathematical equation to only pull up stocks that trade above their average. So that's what this tells us, above or equal to 1. 1 is a factor. 1 is the same as saying 100%. So for easy example, if a stock averages 1.5 million shares on average, then only stocks that traded above 1.5 million will show up for the day. If a stock averages 10 million, of course, right, I want to trade stocks that traded above 10 million. Okay, so I'm looking for a surge above average. That is my momentum filter. Now below that, I've got 2 pattern filters. So the first pattern filter is I want to see a positive change on the candle. I want a positive day of that reversal. All right, so that's pattern. Change price has to be positive. And then the cross, the shift of trend is going to be in the final filter. So I'm looking at the price crossing up on the long-term simple moving average 50. So just with this filter setting, I'm able to search the market automatically to find stocks at a position where they are set up for a potential breakout pattern. This is the formula. Now, each one of these filters has to be checked off. It's not one or the other. It's not this or that. It is this and that. So all of these have to be checked off for this to show up. Every single one of these. The power of that is that this trims that market down. Let me give you an idea here. So the average starting point, the starting point for the search is around 5,500 stocks with market cap and the volume liquidity. So the liquidity minimums here typically bring the list to a total at the top to over 5,000 stocks. 5,000 stocks with a greater market cap that have the average liquidity comes out to about 5,000. The average number of stocks in a list like this that you'll find yourself in is around 50. So we trim down 5,000 stocks to an average of around 50 at the end of the day. Some days there's 20 on a low volume day. Some days there could be over 100, right? But easy way to think about it is we start with 5,000, but at the end of this, on average, we're looking at a specific list of only 50. That allows us to have very precise focus while we're trading, right? This answers what to trade. It's not when yet. This is what to trade. So right now the market's open, so it's not completed for the day yet. Okay, so we're still going to need to let the day finalize itself here, finish up to get us all of the necessary data to show up on the charts here. Okay, so when that happens, at that point, we'll be able to run the list. So there may be some now. Let's just take a quick peek. Not quite yet. Okay, so we'll see some of this filter. Of course, I just gave it to you, so feel free to look at this later. That is what found, okay, Ford. Look at what we asked for. It's got, everyone knows Ford's got the market cap. All the minimums are there. The average, 62 million. But again, this showed up on a list. I just didn't happen to happily stumble upon Ford. It was in a list. The list populates down here. So at the end of the day, this list will populate and fill this box. Again, whatever happens today, whatever steps this criteria, I then set up for tomorrow, right? I'm going to set up tonight to catch the breakout tomorrow. That's how the process works. So you don't have to be stuck in front of your computer all day long. In fact, around 7 o'clock is when I send out the signals for the day. I send out at least 2 signals a day to all my traders. I send them out 7 o'clock to 9 o'clock Eastern time. That gives them 12 to 14 hours before the next day to take what I send to them and put it into their accounts. Okay, that's the process. And so for my clients, in about 2 weeks or less, they're able to take what I send to them and put it into their accounts in 15 minutes or less. but they also will trade this independent of what I send them. When I send them trades, it's just there to help the learning process. It's there to give them fish effectively while they learn how to fish on their own in the financial markets with the strategy. Now, doesn't matter what symbol, okay? This could be a Ford trade, could be, let's go to the NASDAQ, okay? Here's the NASDAQ, and there's the reversal. There's opportunity 1, opportunity 2, right? Look up and down below, look at the reversal points, long-term buy. There's the setup here, spike of volume, sit above it, look at the breakout following. Same thing here, volume kickoff, reversal point. Same thing down here, bearish breakout, all took place here. It doesn't look like a lot because it's a NASDAQ $280 stock back here, right? But that's a 6% run, 16-point drop in just 7 trading days. Okay, that is that initial reversal power. That's what that momentum garners. Now, you don't have to wait for just the 50-day, right? I also provide strategies of how to take advantage of all the other reversals that take place on the smaller time frames. Okay, but again, I don't have 2 hours to explain everything in today's session. But the cornerstone of catching these reversals starts at understanding the big reversal point. That is where you get the bigger initial bang off of that big trend line. Why? Because the 50-day, many of you have heard of that before. It's one of the most commonly used indicators for trends, not just small money like retail traders, but also big money, institutional money. A common setup you'll hear is a 50, 100, 200 day, right? That's big money that trades the 50, 100, 200 day combination. So when you see a lot of money traded, decisions made around a common indicator, well, as retail traders, we want to be with the money. At least I want to be where the money is. So if I use the same type of analysis, then I can be essentially on the side of that money. When I incorporate the volume with the pattern, I'm following the money. Now I got a question here on how do you determine the targets? Okay, so I'm going to pull up the checklist here. Let me clean this up so you can see without my bookmarks. Okay, but this, and I'm going to zoom out. So if you want to take a screenshot, please do so. Okay, I'm going to get rid of the header. That's me. Okay, so you don't need that part. So right here is the exact strategy, the checklist itself, used to set up the targets that you just saw in Ford. Okay, so here are the exact settings I already showed you in this little box. Okay, that's a snapshot right from TradingView. But down here below, you're going to see the trade setup side. So set pending entry 1 tick above previous bar high. That's the entry. Remember, we're going to try to catch it. So this is done before the market opens. So you can do it at night when you get the signal from me, or you can do it in the morning. Just do it before the opening bell, because 95% of these trades, when they go live, when they trigger, will trigger in the first 5 minutes of the next day. It takes advantage of that opening volume that hits the market. Remember, we look at that surge of volume at the end of the day. When that volume and that bell rings the next day, you have that carryover into that next day. That's what creates that spike in that price. Okay. So we're anticipating that volume spike by waiting for that opening bell the following day. Now, profit targets, I teach 2 methods of profit targets, but the simplest way is looking back to find previous highs as targets. So the question was, how do you determine the first target? Well, we go to the previous high. Okay, so to the left, higher, previous high is how we do it. Now, if you don't know how to read highs and lows, I teach that, of course. A tip and a trick to use is to use fractals. Okay, this is Williams fractals. Fractals give us these red arrows, a fractal high, green arrows, fractal lows. Okay, if you don't know what those are, again, that's something I teach, but it gives us a simple way to see highs. And those are defined highs. 2 highs to the left, lower, 2 highs lower to the right. That's a fractal high. Fractal lows, opposite, 2 lows higher to the left, 2 lows higher to the right. Okay, so that's when these arrows appear. It's not a buy or sell signal. Okay, that's not what these red arrows are. It's simply visually showing where highs and lows exist. And those aren't just daily highs, right? Those are defined highs, AKA fractal highs, okay? So by incorporating that, it makes it easy for my traders to go find targets to go after, to find where to put the stop loss, where to take the profit target. To give you an idea, there's 6 trades here that were sent out on Sunday night. It was a busy Sunday, right? You have Murphy, Halliburton, Bank of America, Array Technologies, Regions Financial, Hawaiian Airlines. Okay, so these were 6 signals that were sent out to my group on Sunday night for this week. So when I pull these up, you're going to see the examples of what they look like. Okay, so here's Murphy's. Okay, so this is Murphy Oil. There's our pending entry. There's our trigger. There we are a few days later. You've got my previous high. There's my profit target. There's my stop loss to protect any drawdown. Okay, I want to mitigate risk. How do I mitigate risk? Well, I've got an exit already planned out, right? That's how we mitigate risk. I don't ever discuss trading without protective stop losses. It's just too much of my career have I seen trades blown, and it's simply blown because of a lack of money management. So you've got to have a get out moment. For us, we're active enough that we'd rather get stopped out quickly. So we'd rather get out quickly and get ready for the next trade, right? We have a disconnect mentally between the emotion of the money. So we get out, that frees up capital, right? So if you lose 40%, well, the way we look at it is we save 60% to trade the next trade, right? So we always have a stop loss, but effectively, this is this stock setup. So we take the stock setup like this. And if you want to trade the option, okay, you've done 90% of the work. You found the breakout stock. The other 10% just comes into finding and picking the option chain. And so I only got a few more minutes here. So let me show you what the option chain looks like. This is the selection process. Once you find the stock and you want to trade the option, you drill down and you make sure you find the option chain with a delta between 65, 75. Open interest greater than 100. You want liquidity on the option? That's what open interest is. We want to be in the money. Okay, so delta at 65, 75 range puts us in the money. Expiration, you want to have at least 45 days minimum, and you don't want to go beyond 90. So you want to be in that sweet spot, 45 to 90 for this swing strategy. And then you want your spread be less than 10%. I'll show you how to pick them. See, the value of this is we're able to take this and translate it into the actual signal. And so I'm going to show you this. This is the actual trade that was sent out, the details of the trade Sunday night. And you'll see the level of detail. And it's up front. It's up front because we want to answer all of the management. So you can see this is from Sunday. Here's Array Technology, right? Just give an idea. I sent this out already. There's a long call. There's the expiration. There's a strike price to select. There's a premium to select. There's the trigger. That's when you want to buy the option. That's how you want to use your $22 price as your stop. There's your profit target, 28.10. What this translates into is it translates into a ticket, and I'm not going to be able to answer every piece of this ticket today. Know that I will teach you how to set this trade up like this. This is what the ticket looks like. You've got 3 orders on 1 ticket. Okay, so this is setting up auto execution on your option trade. So you will set up a trade that will buy it automatically for you if it marks at the appropriate trigger. That's what the condition here is. You have conditions, description, conditions. So in green is your entry, in red is your exits. Okay, so I've got a bracket. It's a one OCO bracket trade. One cancels the other. So I've got a stop loss exit. I've got a profit target exit. So effectively, if the trade meets the criteria in the green, my trade is live. If it goes live, then automatically I've got a stop loss and a profit target. All done up front at one time. Once that fires and goes live, your trade is protected end to end. You don't have to worry about it. You don't have to worry about being there to manage the trade. It is fully managed with your stop loss and profit target all at one time. Again, I'm trying to give you an arm's length, simplistic, repeatable process. It may not look simple to ticket. Don't worry, folks. It's just clicking buttons. If I show you the buttons to click and what the buttons do, 95% of my traders pick up on it within a few weeks. Okay, it may look different. Of course it is, but I can promise you it's just clicking the buttons. Now, this screenshot here, this access is the entirety of every single signal sent out since I started this program back almost 3 years ago now. So each one of these trades, and there's almost 400 total trades, has all the details laid out for you. So again, no stone is left unturned. Every piece of every trade is tracked, both open, new, closed, are all fully tracked. Every single screenshot is here. You can go back at any point in time and see exactly what ticket there was. But this becomes, and just for results, everyone asks results. So 3,000 net percent profit. This is a total sum of winners, of losers on a trade by trade basis. Okay. The purest way I found to show results, every trade result added up into one is over 3,000 net percent profit. So the strategy is not a question of does it work or not. It's based upon historical price action. You can go on any chart of your choice now and you will find yourself blown away about how consistent this process shows up over and over again. And again, I understand that there's going to be questions because for most people that see this, you start to really envision all of the different various ways that you could start to leverage this type of opportunity. So with that being said, I wanted to give you at least the roadmap to start looking at the market through this type of platform. Now, if this is of interest to you, of course, I've got a way for you to learn more and keep learning about this process. So at this point, this is the program, the Rapid Profits method, that gives you access to my signals. Okay. I want you to think of the signals I send to you as more of cherry on the top. It's the cherry on the top. I prefer to empower and to teach this. As you can tell, I like to teach in the window of time I have today. I appreciate the time. I love the time with you all, but typically I spend about 2 hours explaining this. Okay. So I just wanted to at least give you the high end look of what this is, because my goal is to, again, teach and to empower and to pass on this historical way. It's time tested. None of this stuff is new. Nothing I said is new. How I put it together is more than likely new to you. But this process is a combination of the signals that come out and all of the direct access to see exactly how and why I send it out to you. This is a great way to pick this up so you can learn as you go, as I walk you through each step of the process. So this service is emails, SMS. This is daily. I run this Sundays through Thursday night. So that way, every day of the week, you've got trades waiting for you. You also have the cloud tracker, okay, in this program. Now, number one, I'm going to give you 4 bonuses to make this a complete program. It's not just signals. I want to provide live training. That's the first bonus. You can meet with me twice a week in my Market Pro Live Club. Number 2, I'm going to give you access to my toolbox. I call it the Empowerment Toolbox. This has all of the checklists, strategies, all the videos of how to set up and find profit targets, stop losses, everything up and down the line. It is a huge portion of the daily management of you driving the strategy if you choose to. I'm going to give you Options Academy. This is for beginners, intermediate, advanced. I've got content for all 3 of those major categories. I'm also going to give you money management training, when to scale up, how to scale down, right? When to set multiple profit targets, when to stop yourself out and reverse your position is taught in money management. So when you combine all of these together, you get a full program of not just signals, but hands-on education and trading. The first bonus is twice a week live access to my Market Pro Live Club. So it's Mondays at 7, Thursdays at 12. This is where the rubber meets the road. 2 hours a session, 2.5 days apart on purpose. You're never farther than 2.5 days away from knowing what's going to happen next. Full analysis, you know, the S&P 500 targets, the NASDAQ, the Russell 2000, the Diamond. Every single week, you know exactly what we're trading to on the high level. And then individually, you're looking at whatever requests that you have. I break down and analyze each and every one of your picks every single week to help you understand how this process flows. Empowerment Toolbox, checklists, all the video content. I'm going to include this with you as well, of course. You need to understand these how-tos to manage this program effectively. Of course, I want to give it to you as a bonus inside of here. Mastery Academy, all of these guidebooks, all of the 41, so total of 41 different strategies. If you want to trade options, you're going to find every single options technique here for you laid out. So fully detailed, fully available to print these out, take your notes on it, and they're yours forever. The money management is all about maximizing profit, how to generate formulas to increase your profitability, how to lock in profit, where to minimize your stop losses, how to use multiple profit targets. That's all taught inside of the money management. So when you sum up all of this and put this all in one program, it is comparable to major level programs that are being used in the market today. And so when you take a look at all the various resources in one and you add these up, these services are not new. I've been running this program for many years at this point. For you, it may be new, but it's not for us here. So when you combine all of this together, it puts us in a simple position to be able to identify and put together a program price that is affordable. Now, typically, this is $798 for the year. Okay, it's not the $14,000. This is not a payment plan. It's a one-time payment, and it gets you access to everything I walked you through for the next 12 months. No additional fees, anything of the sort. Okay, it's one time, and it's all done up front. Now, the only way we're able to do this is because with my experience as a chief revenue officer, I identified ways to minimize overhead on our side and yet still provide amazing support, and it allows us to pass on savings. So to sign up, it's simple. All you have to do is to go to this site. I'm going to save you for this event. I'm going to knock off an additional $200 for today. It's only going to be the next 10. You got to be fairly quick here. In fact, because there's a large room here, I know I have support here listening. We're going to make this double, so 20. All you have to do is go to rapidprofitsplus.com. So it's www.rapidprofitsplus.com, and you'll get everything I want you to do, all the emails, signals, average 2 a day, okay, coming to you. All the bonuses for just $598 for the entire year. It's, again, one time for the next 12 months. That's all it takes. The next 2 weeks are going to be extremely important for you. Next week, we've got a huge calendar full of major economic releases. We have CPI, which is Consumer Price Index, coming out Tuesday. We have retail sales coming out next week. We also have on Wednesday, we have the big FOMC meeting, right? The federal fund target rate decision coming out Wednesday. Thursday's jam-packed, PPI, retail sales, and then Friday we've got University of Michigan consent. So there's lots of red big announcements coming out next week. So in 2 weeks or less, you're going to know full well if this program works. Now, we have a 30-day guarantee. I don't talk about it because I think it's one of those offerings that just don't make sense, because I'm giving you everything up front. You'll be able to download all my checklists, all my videos. You'll learn everything that I put together in the last 20 years of my life. You're going to have it all. But if for some reason it's not for you, you don't have to wait 30 days. I ask, you tell me at the end of 2 weeks from now, if this does not work, if this is not obtainable for you, the types of eye-opening results that you'll have at your disposal, then just tell us, email our support number, and we'll give you 100% of your money back. That's how confident me and my team are around this process. And it's only built, that confidence is only built based upon client testimonials and client results. It's the only way you can have that type of wherewithal to say those types of statements is with that type of conviction backing us up. So I know there's a lot left unsaid. I understand, but if you could understand the concept of what I talked about, find momentum, find a reversal, that is the recipe for a breakout. And if that is something that makes sense, then give me 2 weeks of your time and I will put the rest together for you, and you will be amazed at your transformation, the confidence you're able to have in reading that movement, right? And it's not just what happened, right? It's how do I get ahead of what just happened? And that's the power of this. So if there's questions, I know there's going to be, I'm going to put up our contact information here. So if there is, feel free to reach out, go to that checkout. Again, the first 10, I doubled it. It's now 20. You can save another $200 off this price. So for the next 12 months, I mean, that's less than $50 a month if you want to look at it that way. To get 16 hours of live trading support in my trading sessions for $50 by itself is phenomenal in its own right. Some may think it's crazy. You could tell I like working with a lot of people. So this is a play and an opportunity because I like to work with as many people as possible. I want to empower as many people. So one of the simplest ways to do that is make it extremely affordable. And so that puts the onus on me and the organization to keep you happy and to keep you thriving and to keep you empowered, because you can't make a ton of money on $600, right? So you've got to be able to keep the referrals coming. You got to keep the growth coming. And so that's where I like to put my money where my mouth is and say, look, we'll do it. We'll handle the infrastructure. All I want is an opportunity to help you. And if you allow that to happen, I can assure you with a high percentage probability that you're going to really enjoy looking through the markets through this type of lens. So if there's quite, I don't think I have much time left, but of course, if there is time, I'll stick around. But I do see questions. Here,
I got a couple for you, Matt. You want me to fire them out at you?
Yeah, that's fine. I just didn't want to step on anyone's toes.
No. Listen, I think Norman will be okay if you answer a few. We're all about helping people learn, not just about some of the stuff you taught, but about the stuff that you're actually offering today. How many alerts are in a month approximately from the program?
Yeah, so an average month we do about 2 a day on average. So it could be, so you're talking anywhere from, you could be 45 to 60, but it's about the flow of the market. Some months when it's low volume, it's going to be 20, 30, right? I don't trade for the sake of trading. It's about the opportunities that the market gives us, not forcing opportunity.
Yeah, totally fair. Totally fair. And I think that's the smarter way to do it, as opposed to just trying to fulfill and just giving people trades just to keep them happy. Hey, I gave you a trade and then the trade loses.
Yeah, that's not a good place to be.
Best opportunity, right? Does this work on all time frames?
Yes, it does. So if anyone's trading beyond, if you're looking for months and quarters and even years in a position, then I use a different template. But anything less than months in a position, this is the same strategy. Could be minutes, could be no longer than a few months. This would be the time frame you use.
Okay, I'm not sure you can answer this question in any type of expeditiousness, but earlier you showed a chart of Ford, and it said Ford gapped above your entry price. So how did you manage it from there?
Yeah, so there's 2 ways to enter that. Number one is using a limit order. So if you use the limit, you would not have entered the trade because the limit wasn't there. The limit was over shot. But the other method to take advantage of those breakouts is using a market order with the stock. Okay, so it's a dual order. It's just we're using the market price of the option premium versus putting a limit on it. So I've got traders that are aggressive that trade the market, so they want to catch those big moves. Others will limit that exposure. So if you put a limit, that trade you would not have triggered. If you use the market, you would have triggered based on the stock breakout.
Okay, that makes sense.
It's a personal preference. Yep.
And then I have one last question here. We'll just try to step in here, and you got to forgive me because this happened 27 minutes ago. I'm not really sure exactly what he's talking about, but he said, "How do you determine the first target?"
Yeah, I answered that a little bit for Chris, but
you did.
Yeah. So the profit target, simple way on a buy is we're looking at previous highs to the left, right? If I'm shorting, I'm looking at previous lows. If there's no lows or highs that are recent within the last 12 months, then I teach another method of forecasting a profit target. But primarily it's previous highs, previous lows.
All right, super. Let me remind everybody out there really quick. Matt and everybody who's been here today has given all their time. They've donated their time. They actually sent out to their email list telling people to come and see this show, to not only see them, but see other people. Their offers are in the chat box area, so you guys can go check that out. It's also on the screen in front of you. This is an incredible, really super, super inexpensive offer right now. It seems like you're getting a lot of stuff. Matt seems very enthusiastic about what he's doing, which is, helpful when you're trying to learn. So Matt, I want to thank you for your time. And I want to let everybody they're saying thank you in the chat, and let everybody know the offer's out there and Matt's ready for you guys.
I appreciate you. Thank you. Been a pleasure.
Thank you, sir.